Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Transport tariffs. President Trump revs up the trade war with a 25% tariff on all cars imported into the U.S. The move comes ahead of his broader push with reciprocal levies next week. Turkish market steady as Trump praises President Erdogan and the central bank promises tighter policy if needed. And rear protests. Thousands of Palestinians demonstrate across the Gaza Strip, calling on Hamas to relinquish control and end the 17-month war with Israel. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Hong Kong today, where it is 12 noon, so technically afternoon. Good afternoon from anyone tuning in from Asia. Well, let me just walk through some of the price action that we had in markets yesterday, because markets did not have a pretty end of the day. Wall Street pulling back almost 2%. NASDAQ declines of more than 2% yesterday on one thing only, and that is tariff concerns. And again, as we get into that April 2nd deadline, there are still a lot of fears about what exactly the Trump administration is going to impose. Later on in the evening, we found out that Trump does actually want to impose tariffs of up to 25% on all cars imported into the U.S. So any country with a big auto focus, you can imagine the obvious ones, Japan, Germany, are taking a bit of a fall this morning. You can see that behind me. S&P futures, although they're leaning towards the green, had a bit of a decline yesterday of around 1.5%. Euro stocks futures this morning down 0.5%, and clearly they're reacting to some of those tariff headlines coming through. And then the Nikkei in Japan, no surprise, given it is an auto-heavy economy, but at the same time, the Prime Minister this morning was talking about reciprocating with tariffs. So a bit of a tit for tat going on there. Then 10-year yields are also interesting. Now, you would have thought in an environment where there's so much risk off going on that 10-year yields would be moving lower. In fact, yesterday, they actually stayed pretty steady at around 433, 434. That on back of some of the language that came through from Fed policymakers saying that they're watching out on the inflation side of the mandate very closely and that they are expecting inflation to be quite sticky. That was comments from Musalem. And so on the back of that, the markets sort of kept a lid on how far these yields could travel lower. So 434 is where we are right now. And just to give you a bit of technical details about where the S&P 500 is currently sitting, we've been sort of like testing this 200-day moving average for a couple of days now. We're just above it again, but it is an important technical consideration for the market, because if at some point we do break through it, that could lead to a clean break and obviously another leg of this sell-off. We've been talking about the fact that the S&P is technically in correction or around correction territory, a pullback of 10% from the peak. So bear that 200-day moving average in mind. Now, it's a special day today because I am in the Hong Kong studio, but guess who else is in the Hong Kong studio? Avril Hong is here, not in Singapore. You're in Hong Kong today.
Yeah, we are finally in the same studio, Jumana. And, you know, what a day it is, right? Given how markets are really digesting all the tariff news. So we're actually seeing how auto stocks in the region are getting hard hit, right? You suggested this tariffs going to be put in place on auto products, as Trump suggested, for next week. So in Japan, South Korea, those are the vulnerable pain points, the drags on the benchmarks. But you're also getting some form of cross currents, as we heard from reporting that NVIDIA sales could be affected when you look at some of the China new rules that could be affecting these advanced chips. We're seeing these chip-related stocks, including the ones in Taiwan, they're the drags on the benchmarks there. The outperformer today is what we're seeing in China. Note here, this is a market that's today more or less being led by tech stock surge. After earlier in the week, the Hang Seng Tech almost at one point approaching correction. So it's been quite a turnaround. In the past couple of days, we've heard from the likes of Morgan Stanley, Goldman Sachs sounding more bullish on Chinese stocks. And then Trump also suggesting some carve-outs when it comes to reciprocal tariffs related to ByteDance and TikTok in relation to a deal. So that's what we're seeing across the region. The yen also maybe catching a bit of a safe haven bid, amid the risk off in the region. Jumana.
Well, I guess when Trump gives with one hand, he takes away with the other. So you've got auto tariffs, but potentially lower tariffs on other sectors. Avril, thank you so much. Great to have you in studio. Now, President Trump, let's go back to this top story. President Trump has signed a proclamation to implement a 25% tariff on auto imports, which will go into effect next Wednesday.
What we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
For more, let's bring in Bloomberg's John Herskovitz. John, what do we know about these latest car tariffs?
Sure. The tariffs are going to be they're going to hit a lot of people very hard. We spoke with one analyst who said there are very few winners in this. Now, in terms of the car companies have the biggest exposure in terms of bringing imports into the U.S. market are the likes of Volkswagen, the Hyundai, Kia Group. But U.S. automakers as well have imports that are going to be hit by these tariffs. And also, you're going to see things like components being taxed as well. So, yeah, you may have a major automaker like Toyota, which employs tens of thousands of people, has manufacturing plants in the U.S., and some of the things that they bring in to make cars could be hit by tariffs and hurt their production. Other people, the consumer also is likely to be affected by this. Some studies indicate that the cost of cars could go up by several $1,000s, and that's something you want to happen when consumer confidence is taking a bit of a hit in the U.S. So there's just a lot of people who are going to be affected by this, and it's really difficult to see who's going to end up making out being a winner in this.
Yeah, I mean, we've talked about this before, but every action has a reaction, and countries are looking to respond differently. The UK, Mexico have chosen not to go for a tit-for-tat approach, but other countries, and particularly those exposed to auto tariffs, may be looking to respond as well. So what do we know?
Sure. We've had a lot of, at this point, just talks going on. EU is considering it. Japan's Prime Minister Ishiba said that some sort of reaction is not off the table. South Korea is holding a meeting today. The Prime Minister of Canada said this was a direct attack on his country. When it came to previous tariffs on steel and aluminum, we had some quick reactions, retaliation from the likes of Canada and the EU. So at this point, it's in the consideration phase. But if it's rolled out and given the broad encompassing effect of these tariffs, some sort of reciprocal actions are likely to come. And these are countries that are some of the U.S.'s closest partners and traditional allies that are going to be hit the most by these tariffs.
John, you mentioned those steel and aluminium tariffs. We're obviously today talking about auto tariffs. Are there any other specific sectors that we need to be mindful of in the coming weeks that may also be targeted?
Sure. There are some that are being looked at, including lumber, pharmaceutical drugs, semiconductors, and we also have these reciprocal tariffs, broad-based global, that are supposed to be coming out April 2nd. So there's a lot that's on the table, a lot of sectors that could be affected, and a lot of countries could be hit by tariffs.
John, thank you so much. Bloomberg's John Herskovitz. Tariffs clearly top of mind. For more market reaction, joining us now is Satyajit Singh, head of fixed income strategy at Emirates NBD. At the top of the show, Satyajit, I was talking about the price action in U.S. Treasuries and the fact that we're sort of stabilizing around this 4.3% mark. How, as a fixed income trader, are you thinking about the possible risks from tariffs? Are they bad for growth, or are they going to be inflationary?
I mean, both the dynamics will impact the direction of the yields, right? At present, I think the market is focusing a little bit more on inflation fears rather than growth dynamics. That's why we have seen the 10-year yield go up from the 4.15% that it hit last week, and it's hovering around 4.35%. Our fair value estimates for this year are around 4.3%. If no black swan event happens. But we think soon the market will start looking at growth scares. We have a long duration call since the start of the year, has worked out well. But currently we are more of neutral in terms of building new portfolios. But we expect yields could go down a little bit from here, as such, towards 4%.
What do you think about the...
For us, the key values are... For us, the key values are 3.8% and 4.5%.
And the front end of the curve. Let me just go back to my question. What do you think about the pricing in the front end of the curve with about 60 basis points of rate cuts priced in?
Our in-house estimates are for 3 rate cuts this year. So we are round about there in terms of market estimates. I think market started with a 2 rate cut scenario in line with dot plots. But obviously, the FOMC members have become hawkish. But we think that Fed is asymmetrically dovish at this point of time. So they would like to protect the economy from the impact of any uncertainty rather than wait and watch. So that's why we are still maintaining our 3 rate cuts. So I think the market will start pricing somewhere close to that very soon.
Yeah. So there's potential more to be priced in the front end of the U.S. yield curve. One other part of fixed income that I've been watching recently is we started to see a widening out in credit spreads, which is interesting because credit spreads have been trading so tight. And it's only in the past few weeks that we started to see a widening go on there. Why do you think that's the case? Is it a valuation play, or is it just a matter of the world realizing that perhaps the data may actually take a turn for the worse?
In terms of credit spreads, if you see there is a decompression theme that is going on in investment grade versus high yield. IG spreads have more or less been range bound. Yes, they have widened by 5 to 10 bips, but that's not huge compared to what's happening in the high yield sector. I think there is a clear-cut differentiation in terms of the sectors contributing. If you look at investment grade, the sectors that are impacted by tariffs like autos and airlines and metals and mining, they do not make a huge part or contribution to the IG outstanding bonds as such. So spreads there have been more or less robust. If you compare that to high yield, yes, the spreads were very, very tight. In fact, tighter than 10% if you look at historical 20-year spreads. And that's why I think it's more of a valuation game. Plus, if you see consumer confidence going down, growth scares being all around, Fed projecting lower growth estimates for the end of the year, all of that is affecting sentiment at this point for high yield. And we think this decompression theme still has some legs to play out.
Yeah. Satyajit, today on our terminal, we've got a big take story about how all of the bankers towards the end of last year were super excited about the potential pickup in M&A activity this year, a pickup for deal making. But that actually hasn't transpired because of all of the uncertainty around tariffs. Many of these deals have been put on hold. How are you thinking about the financial space from a credit perspective? Is it still a sector you would want to be long, or are you a bit cautious now?
So financials, we have been long since last year, mainly because of the deregulations that we expect that to come in. Yes, the M&A space has been a little bit slow, but that actually gives some kind of, I would say, resistance to the IG spreads from going up, because if you see, financial sector is the largest issuer for investment grade bonds, and if the demand is still there, I mean the yields are still attractive in the IG space, but the supply we expect it to come down by almost 25% this year. So M&A not happening is not exactly a bad thing for the financials. I think especially because you can still pick up some yield, but spreads remain range bound for the financials.
Yeah, very clear. Okay, I'm going to round out the discussion with a question about local bonds and what's been happening in Turkey over the past week. We're keeping a close eye, but clearly both the central bank governor and the finance minister, Mehmet Şimşek, have tried to reassure investors' concerns. I don't know if you do have exposure to Turkish local bonds, but how are you reading the messaging that's coming through from authorities?
We do recommend local currency carry trades for some of the aggressive clients that we have. I think what happened last week, I mean, this is typically the political risk that you take on when you have a 50% overnight rate in an emerging market high-yield country as such. At that point of time, obviously, market overreacted. The lira depreciated by 12%. But obviously, there has been a little bit of intervention from the financial institutions, which has stabilized lira. And so far, if you see YTD, lira has corrected by 7.5%. And if you compare to the almost 46% overnight rate, that's still a positive 5% dollar return in a quarter as such. For us, we still recommend it. There are 3 key things. The key government officials are still there. They still back Erdogan. There is no sign of early elections as of yet. We do not see a trend of dollarization, which has been going on for the last couple of years, reversing at this point of time. And moreover, the FX reserves are enough for them to intervene in the market in the short term and stabilize it. And that's why we are still positive on the possibilities of this carry trade at this moment. Obviously, international investors will take some time after the high volatility that we saw to come back in, but I think that is an opportunity for our clients.
Fantastic. Thank you for sharing your views with us, and obviously very topical with all the developments in Turkey. Satyajit Singh, head of fixed income strategy at Emirates NBD. And still ahead on Horizons, two economies in the Middle East are facing economic repercussions after major political unrest. Details up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Hong Kong today. Two economies in the Middle East have been facing the repercussions following major political unrest. In Turkey, the turmoil surrounding the arrest of Istanbul's mayor, Ekrem İmamoğlu, seems to have accelerated the central bank's FX reserves outflow. Bloomberg Intelligence estimates that the cost of stabilizing the lira hit $27 billion in just 3 days. Israel has also seen a wave of protests following the firing of the Shin Bet chief and steps towards dismissing the attorney general. Israel's shekel is down 2.8% against the dollar in the past month, making it the worst performer globally after the Turkish lira. So two of the worst performing currencies happen to be in the Middle East. Joining us now is Paul Wallace, who leads our MENA economy and government coverage. Let's just start with Turkey. We just had a guest on the show now. And he was saying that he listened to some of the words coming from the finance minister, from the central bank governor the last few days, and they're actually recommending to hold on to their carry positions in the front end of the Turkish curve. And I guess, Paul, this is perhaps the exact outcome that the authorities, at least in the financial space in Turkey, are trying to achieve. So talk us through some of the developments from that perspective and how Turkish authorities are trying to quell investors' nerves.
Hi, Jumana. Yes, that's exactly right. That's the type of statement, and those are the kind of comments the Mehmet Şimşek, the Turkish finance minister, the central bank, and to be frank, Erdogan want to hear. They want to hear that investors are holding on to their positions, or even increasing them, thinking that that valuations have become too cheap in Turkey based on the fundamentals. Of course, if you're looking at the fixed income market, real rates are still pretty good. But I will have to say that despite Turkey managing to calm markets more or less, and we have seen a partial rebound in the stock market, in the bond market, and even a stabilization of the currency in the last three sessions, it's come at a huge cost. Bloomberg Economics is estimating that net reserves fell by about $27 billion at the end of last week, which is, wiping out almost half of Turkey's net reserves. So although that stabilization is there for now, it's not come cheaply for the Turkish government and central bank.
Yeah, that is actually a huge figure to be aware of, $27 billion, according to our Bloomberg intelligence analyst. But, Paul, to what extent do you think the politics are being factored in here, the international politics? Yesterday, President Trump, when referencing President Erdogan, said, good man, good place. So indirectly throwing his weight and support behind President Erdogan.
Exactly, an endorsement of sorts, I guess, from President Trump, even if it was unclear if he was referring directly to the detention of Ekrem İmamoğlu, the mayor of Istanbul, and the subsequent protests. But again, that's the type of thing that will go down very well with Erdogan. He's facing very little international pressure, which I think is one of the reasons Turkish authorities are not backing down in the face of protests. There's nothing from the US, of course, very little in terms of pressure, and even the condemnation from the EU is not that strong. There's a changed international and geopolitical environment, and in many ways the EU needs Turkey, given everything that's going on with Russia and Ukraine and its increased defense needs, and especially because of its the EU's fears of Trump sort of getting the US to reduce its footprint. Security footprint in Europe.
Yeah, Paul, while we have you with us, I do want to ask you about a development that happened yesterday within Gaza. Some anti-Hamas demonstrations took place. So Palestinians were demonstrating against Hamas. Is this, to our knowledge, the first time that these types of demonstrations have taken place on the Strip?
Of this size, it does seem like that. There have been reports of very small protests against Hamas in the last 18 months or so since the conflict started in late 2023. But this seems to be the first of this size when thousands of people seem to take to the streets in parts of the north, including Gaza City, the main urban area in the Palestinian territory. So that is significant, and I think everyone will be watching closely to see whether these continue in the coming days and spread to other parts of the territory. And just to note, it's something that seems to have got some Israeli officials pretty excited. Benjamin Netanyahu said that this was essentially a good sign, a sign that Hamas's rule is weakening. It's hard to tell at this stage if it's a one-off or something that will grow.
Interesting. Paul, thank you so much. Paul Wallace, who leads our MENA economy and government coverage. Thank you. And still ahead, Senator Elizabeth Warren calls for Congress to investigate the signal message saga. Our exclusive interview later this hour. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Hong Kong. The Trump administration has cut $20 million in funding for the agency responsible for chip export controls. The Bureau of Industry and Security oversees trade in U.S. technology, and the 10% budget cut has drawn sharp criticism on Capitol Hill. Democratic senators say it threatens U.S. efforts to stay ahead of China in the AI race and compromises national security. President Trump has reiterated his desire for the U.S. to annex Greenland as Vice President J.D. Vance heads to the island. Trump says Washington needs Greenland for international safety and security, and that it is essential for defensive and offensive postures. Vance's visit to Greenland, which was initially billed as a family outing, has been scaled down amid local backlash. Former Brazilian President Jair Bolsonaro will stand trial on allegations that he attempted a coup following his 2022 election defeat. A Supreme Court panel unanimously voted to accept criminal charges against him. Bolsonaro has denied wrongdoing and accuses the Supreme Court of holding a personal grudge against him. And up next, more on that signal saga occupying Washington. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Transport tariffs. President Trump revs up the trade war with a 25% tariff on all cars imported into the U.S. The move comes ahead of his broader push with reciprocal levies next week. Turkish markets steady as Trump praises President Erdogan, and the central bank promises tighter policy if needed. And rare protests. Thousands of Palestinians demonstrate across the Gaza Strip, calling on Hamas to relinquish control and end the 17-month war with Israel. It has just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Hong Kong, where it's 12:30 p.m. And again, there is one thing that investors are talking about, and that is tariffs as we approach that April 2nd day. Yesterday, deep declines for Wall Street, both S&P and NASDAQ pulling back heavy in the red. NASDAQ down more than 2%. So the tech sector really getting a beating yesterday as we head towards April 2nd. And with President Trump announcing that there will be a 25% tariff rate imposed on all cars imported into the U.S. So clearly that's having ramifications on any auto-heavy country. But then equally, there's also some reports suggesting that the Trump administration is considering 20% tariffs on European goods. So take a look at the market reaction today. S&P futures slightly in the green after the sell-off yesterday by the close, but European futures down 0.4%. Tariff fears, growth fears, once again at the center of attention there. And then the Nikkei in Japan down 1%. Ava will walk us through some of the big drivers there. But namely the automakers getting hit, and also talk about reciprocal tariffs coming through from Japan on U.S. goods. So that is something that's driving that market. And then the pound, I also just want to draw some attention to what's been happening with a cable, because yesterday was a big day for the UK market. We had not only weaker than expected inflation data come through, which sets the tone for perhaps a cut at the next meeting, the Bank of England meeting, but also that all-important UK budget. And gilt investors were cheered on by the fact that the borrowing announcement was slightly smaller than what had been anticipated. So you did actually get a big rally in gilt yields yesterday. And that, on the back of that, you saw a bit of a downward move in the pound. So that is where the pound is trading this morning, 129.20. But this is another chart that I thought was interesting, given the main news of the day is about those auto imports. This is where the U.S. imports most of their cars from. You've got Mexico, South Korea in Asia, Japan in Asia, and obviously Canada and Germany in the eye of the storm as well. So these are the countries that are going to be most affected by those 25% tariff rates. So with that in mind, let's check in on how markets in Asia are faring with Avril. And how are these economies responding to news of these tariffs, Avril?
Yeah, it's a bit mixed, right? As we see Japan, almost one of the top of that list, we're shining the spotlight on how this is going to impact the economy. I mean, if you look at how, in terms of the Japanese exports to the U.S., about a third of that is actually made up of auto products. It could be very vulnerable to these tariff concerns. And then you hear from the likes of Prime Minister Ishiba not ruling out countermeasures. So do they take things to the limit? What sort of tit-for-tat measures are we looking at here? It's interesting. Some of the analysts that have been weighing in suggest that when it comes to these tariffs, given how they're going to affect all countries, that could also mean that Japan could maintain this relative competitiveness. But for now, you're seeing the reaction in the stock markets. The transport gauge is the drag on the topics, and keeping in mind as well that amid all this, we are seeing Asia currencies mostly firmer given the dollar slide. The yen is leading those gains. It is the outperformer in the region today, maybe also a bit of a help from that risk off in the region, Jumana.
Yeah. Avril, thank you so much. Great to have you in the studio here. All right, President Trump and his allies are struggling to fend off criticism after the editor of The Atlantic was accidentally added to a group chat where top U.S. officials were discussing attacks in Yemen. Speaking to reporters from Joint Base Pearl Harbor, Hawaii, U.S. Defense Secretary Pete Hegseth, one of the people in the Signal chat, says no details were shared.
I noticed this morning out came something that doesn't look like war plans. And as a matter of fact, they even changed the title to attack plans because they know it's not war plans. There's no units, no locations, no routes, no flight paths, no sources, no methods, no classified information.
But as the President National Security Advisor stated, no classified information was shared. There were no sources, methods, locations, or war plans that were shared. This was a standard update to the National Security Cabinet that was provided alongside updates that were given to foreign partners in the region.
Democratic Senator Elizabeth Warren is among lawmakers calling for a congressional hearing on the Signal text incident. She told us exclusively that Defense Secretary Pete Hegseth should be fired if he refuses to step down.
If Pete Hegseth had a shred of self-respect and decency, he would resign. That's what leadership is about. And instead, Pete Hegseth thinks it's all about point at somebody else and minimize the problem and sweep it under the rug and deflect. You know, you want to be a leader of the finest armed forces in the world, then step up and take some responsibility.
Should he be fired? You talk about him resigning.
If he won't quit, then he should be fired. Because he has put our national security at risk. That's part one. Part two is you realize a bunch of this is potentially, certainly, breaking the law. So, for example, because of the Freedom of Information Act, there are laws that require that people in the administration, all of them, have to preserve the records of their texting back and forth. I know this from the days when I served in the administration, and we were carefully cautioned about the importance of preserving records. Signal, as you know, disappears those records. And I will say on this, when I read how casually they just formed this chat, notice that's how you refer to it, right? To discuss the national security issues and the bombing of another country. How many other times are they using Signal, and what are they using it for? So this is a moment, we need some of those congressional investigations. We need a hearing in the Senate. We need a hearing in the House. I remember all of the hearings before. When there was a question about Hillary Clinton's emails, I want to run the tape on how many Republicans talked about the importance of accountability and getting to the bottom of this. Where are they right now? I'm ready for those hearings, and the FBI needs to step up.
This was a chat that was organized by Mike Waltz, the President's National Security Advisor, and he addressed this in an interview on Fox News. Here's what he said. "We made a mistake. We're moving forward." I noted that, by and large, the response from the administration has been there wasn't classified information here. And as a result of that, The Atlantic released screenshots of a lot of these conversations. We learned that there was information about planes, timing of this attack. You talk about the need for hearings. Are you optimistic that that's going to happen and that you're going to get to the bottom of what was, in fact, discussed on that chat?
So I think this is a question fundamentally about where is power in this country. I get it. Elections, we pick a president picks a team, and that's where power resides in terms of the execution day-to-day of various policies. But ultimately, it's people across this country.
U.S. Senator Elizabeth Warren speaking to Bloomberg's David Gura there. Now, let's discuss the Signal saga further with Bloomberg's John Harney, who joins us now from Washington. I guess, John, the question becomes, was the data on that WhatsApp group, Signal group, was the data on that Signal group classified or unclassified material? Because if it was classified, then there will be broader repercussions.
Well, that's part of the whole debate here. The administration, the Trump administration, seems determined to pursue this, what Richard Nixon called a tough it out way of getting through this, getting past this problem. At the same time, though, some Republicans and conservative influencers are saying are getting somewhat impatient with that approach. Because clearly the story does shift a bit. Mike Waltz, the National Security Advisor, said that nothing of significance was in this chat, and then the Atlantic today, Wednesday, published transcripts which showed that military plans, specific military plans, and details of this operation in Yemen against the Houthi militant group were definitely discussed.
Yeah. What is the likelihood we're going to get a congressional investigation into what happened?
Well, that is now quite likely. Roger Wicker, the chairman of the Armed Services Committee, who seems to have questions about this and skepticism as to as far as the relentless denials coming out of the administration, said he agrees with Democrats that there should be some sort of inquiry. Now we'll see how that unfolds in the weeks ahead. This is, I will say, a distraction when the Trump White House really doesn't need one. Not that you ever need one, but it comes at a time when tariffs have been announced just today. As you mentioned, the automobile tariffs, and as President Trump is trying to get his very complicated and sweeping tax measure through Congress.
Are there likely to be any then individual repercussions on Pete Hegseth himself, on the National Security Advisor, if not a congressional investigation?
Well, it's interesting. Some of the people who are on this chat seem to have maybe distancing themselves a little bit, not necessarily, not by name, not to anybody else by name, but Marco Rubio, who was on a on a trip to the Caribbean, said somebody made a mistake. Now, he didn't say who that somebody was, but there's clearly a bit of turmoil here within the Trump White House.
Yeah.
And this is something we were much more used to in the first administration, but here it is happening again.
Yeah, a really big story over there. Let's see how this all plays out. Bloomberg's John Harney in D.C., thank you so much. Now, the founder of TikTok owner ByteDance has become China's wealthiest person for the first time. Zhang Yiming's wealth jumped by over $10 billion after investors valued ByteDance at $312 billion. The fate of TikTok in the U.S. remains unclear, with an April 5th deadline for a sale or ban of its operations there. And coming up, we look into the economic cost of passing anti-LGBTQ bills in Africa. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetti in Hong Kong. A new study by Open for Business has found that rising discrimination against LGBTQ people is costing East African economies as much as $5 billion a year. That figure is set to spike if Kenya passes a bill punishing same-sex relations with 10 years in jail. For more, Bloomberg's Ondiro Ganga joins us now. First of all, it is astonishing that these laws are considered being passed. But Ondiro, walk us through how they're evaluating what the economic costs are for these LGBTQ laws and how they come to those figures, how they came to those figures of $5 billion.
Hi, Joanna. So you look at sectors that will be heavily impacted or have been heavily impacted ever since some of these countries have passed their anti-LGBTQ laws. Take a look at Uganda, for example. They passed one of the harshest anti-LGBTQ laws in the world that in there has a death penalty for aggravated assault. And immediately we saw the World Bank freeze funding. So there was no money going into critical sectors like infrastructure, agriculture, healthcare, education. And all these have a compounding effect on these economies. Take a country like Uganda. Infrastructure is a big driver of the economy. Agriculture is also the backbone and one of the major contributors of that economy. You also have FDI reducing. So you have companies that come from countries like the US or the UK becoming a little bit more hesitant to put their money in that economy because of how they will be perceived at the international stage and also just a keenness to uphold human rights. And the report was saying that coffee farmers accounting costs of up to $2.4 billion annually. The same case applies to Kenya. If this bill is to come into law, Kenya is a country that heavily relies on tourism receipts, foreign direct investment. So those are some of the areas that they will take hits, and that compounds into the figure that the report put out.
Yeah, I remember when we were talking about Ghana and the context also of some of the international funding and the reservations international institutions may have lending to Ghana if this bill actually goes through. So just tell us, how far along now are Ghana vis-a-vis reviving their anti-LGBTQ bill right now?
Jumana, it's neither here nor there because you have the Speaker of Parliament who has vowed that he is willing to put his life on the line to revive this bill. But then you have the President of the day who has remained very diplomatic about this bill. On one hand, he has said that if it's to come back, it should come back as a government-sponsored bill and not necessarily a private member-sponsored bill. But on the other hand, he was also talking about inculcating these family values into the school curriculum so that there will be no need to legislate family values. Instead, children will grow up having them, having learned them in school. But also, on the other hand, when they go on the international stage, they've always softened their stance. We saw this with the former President Nana Addo Dankwa Akufo-Addo, where he was a staunch activist against anti-LGBTQ, and when the former Vice President Kamala Harris visited, he said Ghana was a country that is keen on upholding human rights for everybody. The Ministry of Finance previously made it very clear the cost could be up to $6 billion. Ghana is still very vulnerable economically, so they want to do everything in their power to ensure that they stay in good books with their international partners.
Yeah, I think that's key there. Bloomberg's Ondiro Ganga in Kigali, thank you for bringing us that story. Very important to watch. Now, Egypt plans to increase spending by 18% next fiscal year, partly to support the most vulnerable as the country emerges from its worst economic crisis in decades. The draft budget projects spending at $91 billion starting in July, with a targeted primary surplus at almost 4% of the GDP. This comes after the North African nation received a global bailout last year, led by the UAE and the IMF, totaling $57 billion. Up next, deal makers started the year with lofty ambitions for M&A, but now they're sounding an alarm. The details in today's Big Take coming up. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Hong Kong. Deal-making is on hold as top bankers and advisors are warning that lenders are being more selective about the transactions they're willing to back. The expected deals boom under Donald Trump's presidency has not materialized, with only $590 billion of M&A announced through March 2025. Now, Bloomberg's Asia Deals reporter Manuel Baigori joins us now. Good to have you with us. So, well, actually, for me to be in your studio, let me rephrase it.
Yes.
Let's talk about perhaps why this deal-making and this huge wave of deal-making hasn't manifested in the U.S. this year, because people were really excited towards the end of last year.
Indeed, Jomana, there were a lot of big expectations coming into 2025 after Donald Trump's victory in November and his promise to, cut taxes and red tape and tame inflation, all, good signs for potential deal-making. However, this first quarter, the data shows that deal-making is far from, the expectations coming into the year. I mean, a bunch of reasons, but mostly volatility. There's been a lot of uncertainty.
I was going to say, 2 days ago, we were talking about the fact that U.S. consumer confidence has fallen to a 12 or 11-year low, basically the really lows we haven't seen in a really long time. Yeah. That also is beginning to affect business confidence as well. So you have to think that that's going to have ramifications on companies that may be looking to do a deal, maybe looking to combine with another entity, maybe considering M&A.
Precisely. M&A is a long-term game. Companies invest hundreds, billions of dollars acquiring assets, acquiring other businesses. And some of that is transformative, meaning that it's going to affect the business and the strategy in the long run. So those decisions cannot be made amid a lot of volatility and uncertainty. It's really difficult to price assets.
Yeah.
And both buyers and sellers find it really hard to find some common ground. And they don't want to, look stupid, right? After announcing a deal, imagine that you price something at $5 billion and then 2 weeks later is worth like half.
Yeah.
There's a lot of risk
the uncertainty.
In that. Exactly.
It doesn't create a positive environment conducive to these types of activities. Are there any sectors that are more harshly hit than others? And I just wonder, in the context of tariffs, obviously today the focus is on the auto industry. And I just wonder whether there are some sectors that are somewhat immune to all the tariff noise or the uncertainty that are actually doing okay this year.
Yeah, that's a great question. I mean, it's affecting across the board, across all sectors. I mean, it's interesting because at the very beginning of the year, there were a couple large transactions, one in the energy space out of the U.S., another one in the healthcare space. So the animal spirits felt like we're coming back. However, right after that, mid-January onwards, the number of transactions, call it north of 10 billion, has been very, very minimal, with a few exceptions. Part of that is also private equity. There was a lot of expectation that private equity firms, which is a large driver for deals, was going to be super busy. There is anything but, I mean, it's just still very quiet. Buyers and sellers are still in wait-and-see mode at the moment.
And just a final question on the macro. How are higher interest rates being factored into those decisions as well? Because equally, people thought we were going to see a massive rate-cutting cycle this year and have had to reevaluate.
Jomana, that has a huge impact, mostly because when companies are going to raise financing for acquisitions, it clearly impacts the cost of capital and obviously the way they can afford those potential transactions. So definitely a massive impact.
A big one to watch. Great to discuss our big take with you today. That was Bloomberg's Asia Deals reporter, Manuel Baigori. Now, Bloomberg has learned that China has told state-owned firms to hold off any new business deals with Li Ka-shing and his family. This comes after the Hong Kong billionaire irked Beijing with his plan to sell 2 Panama ports to BlackRock. Under the directive, state enterprises wouldn't immediately get approval for business activities linked to the tycoon, though existing tie-ups would not be affected. So an interesting regional story over here. All right, a look at equity futures, because things are looking up versus where we were yesterday for Wall Street. Steep declines by the end of the session yesterday, with the S&P seeing losses of more than 1.1%, NASDAQ down more than 2% in trading yesterday. Today, things are leaning slightly towards the green, but keep an eye out on the tariff impact and that is having on global markets. You can see European futures are seen opening up in the red, bit of a risk-off session expected there, down 0.4%. Not just in back of the auto tariffs that Trump said that they were going to apply a 25% rate, but also on back of this other number that's being floated, a 20% broad-based tariff on European goods. So it's not looking good as we head into the April 2nd deadline for some of these European countries. And of course, the other question is how these European countries are actually going to respond. So reciprocity, clearly a theme too. Now, coming up in the next hour of Horizons, Ionic Asset Management's Ankita Pathak discusses her global market strategy. We'll be speaking to her and more in the second hour of the show. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Transport tariffs. President Trump revs up the trade war with a 25% tariff on all cars imported into the U.S. The move comes ahead of his broader push with reciprocal levies next week. Turkish market steady as Trump praises President Erdogan and the central bank promises tighter policy if needed. And rare protests. Thousands of Palestinians demonstrate across the Gaza Strip, calling on Hamas to relinquish control and end the 17-month war with Israel. Well, good morning again. It has just gone 9 a.m. across the Emirates. I'm Jumana Versace in Hong Kong, where it is 1 p.m.
Yeah, and I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, many investors were waiting for some tariff news to get a little bit of clarity. We got a bit of that overnight from President Trump, as well as some news around TikTok. I don't think many people were expecting to get that, but a lot of deadlines coming up as April approaches.
Yeah, still uncertainty, though, with TikTok and what's going to happen with ownership as we get to that deadline. But that is another deadline that the market is watching out for from a corporate perspective. Yeah. But it's interesting you raised that, Jen, because I was saying earlier on in the show that when Trump gives with one hand, he takes away with the other. And so on this point, he is floating the possibility of lower tariff rates on some Chinese goods in exchange for a deal with TikTok. But at the same time, the bad news, I guess, for automakers around the world is that he's announced a 25% tariff on auto imports. So there you go, the good and the bad. But this is the reaction today on markets. S&P futures leaning towards the green after yesterday's pullback. It was quite a heavy close for both S&P and NASDAQ. S&P down almost 1.1%, the NASDAQ down 2% in trading yesterday. Today leaning towards positive. But European futures down 0.4% in the eye of the storm, of this tariff storm that's coming up. Nikkei as well, Japan, keep a close eye on that market, specifically because of its auto industry and its exposure there on these potential auto tariffs up to 25%. So that's hitting some of the sectors within the Japanese markets. And then 10-year yields also trading flat today around 4.35%. Interesting comments coming through from Fed officials, the likes of Musalem, indicating that they're keeping a close eye on some of the inflation pressures that might come through from these tariffs, which may actually price out some of the rate cuts that are priced into the U.S. curve this year. There's about 60 basis points of rate cuts priced in from now till the end of the year. So that's the reaction in 10-year fixed income. But again, let's go back to the S&P 500. After yesterday's pullback, we're still just above the 1-year 200-day moving average. So we're sitting very close to this important technical line. It's important, clearly, because if we have a sustained drop below it, then that may bring in some technical accounts to start selling on. And we are sitting also at another key level, which is very close to correction territory, down 10% from all-time peaks. And so anyone who is analyzing charts will pay close attention to this one, because it could be quite a major development if it sustains a level below that 200-day moving average. All right, that's the S&P 500, but let's also check in on how markets in Asia are faring with Avril Hong, who is actually with me in Hong Kong in the same studio for a change. Avril.
In the same space, Jumana. And I thought I'd just rake through as well what we're seeing in China, because we've been talking so much about the auto stocks, right, today getting hard hit because of what Trump is suggesting in terms of auto levies going into place next week. But we're back from the lunch break on the mainland and in Hong Kong. And as I said, these are the sectors, the stocks that are kind of outperforming. Part of this has to do with what you and Jen were just discussing on potentially these lower tariffs on China that Trump's suggesting in order to secure a deal on TikTok. So that outperformance is quite pronounced. A bit of that is also to do with the rotation out of U.S. tech stocks into Chinese tech. This gauge of Chinese tech shares that earlier in the week was almost close to correction has experienced quite a bounce back. And of course, in more recent days, we've seen the likes of Morgan Stanley and Goldman Sachs sounding quite positive on Chinese shares. Now, amid all this, we're also seeing that firmness in the offshore renminbi is managing to snap a 7-session losing streak, Jen.
Thanks so much, Avril Hong. We will check back in with you in just a bit. Let's get back to our top story. President Trump has signed a proclamation to implement a 25% tariff on auto imports, which will go into effect next Wednesday.
What we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
That was just part of what we heard from President Trump on Wednesday. For more, let's bring in Bloomberg's John Herskovitz. John, walk us through who the breadth of companies, of potential consumers that could be affected by these tariffs.
Sure. In the short term, there are going to be a lot of losers and not many winners. In terms of the car companies, the ones that have some of the biggest exposures in terms of the percentage of imports of sales in the United States are the likes of Volkswagen and the Hyundai Kia group. But all automakers, all these big automakers are affected, and this includes American automakers as well. Now, the tariffs are also supposed to apply to major parts of cars, engines, drivetrains, and that sort of thing, which can be supplied in various places. And you have a company like Toyota, which manufactures in various states across the U.S., but a lot of its components come from overseas and will be subject to these tariffs, which will increase prices, and this may hurt American workers. In addition to that, we're expected to see higher prices for cars, several $1,000s per car. And this is coming at a time when consumer confidence is waning in the U.S. And with higher prices on cars, this could affect auto sales. So you're seeing this from various angles, and it looks like the hit is going to be coming to a lot of people, a lot of places, and a lot of companies.
Right. And John, when we think about just in response, we've heard already a number of countries that have responded. Ursula von der Leyen of the European Commission calling the decision regrettable. Do we have any substantial, tangible evidence of what they're going to do in response at this point?
We don't have any tangible evidence of what the reciprocity is going to be with the various countries and blocs. I mean, these tariffs are mostly going to hit U.S. allies and partners. The EU is looking at what it will do. When there were previous tariffs on steel and aluminum, they did some reciprocal actions. The Prime Minister of Canada saw these tariffs as a direct attack. On the Japanese front, Prime Minister Ishiba is saying that all things are on the table, so there might be some sort of retribution from Japan. South Korea, a huge automaker, it's convened a meeting of top government officials looking at what to do. So the talks are going on. The specificity of what may come in return has yet to be worked out by various governments.
And yet, as we continue to approach April, there are still other looming deadlines that could potentially come in terms of tariffs and the promises that Trump has made. What do we know? What are we expecting?
Sure. There are two things that are coming up. There are the reciprocal tariffs that are going to be global, coming on April 2nd. Trump is trying to downplay this a little bit as to the breadth and the nature of the hit that it's going to be coming. So we have that on one hand, and we also have perhaps more sectoral specific tariffs coming. I think the likes of lumber, semiconductors, and pharmaceutical drugs. So we're seeing a lot of tariffs coming up on the horizon. Next week is going to be a big week. April 2nd is the big day for the tariffs. So we'll see what comes and what the reaction is in various places in the world from U.S. friends and foes alike.
Right, Liberation Day, as President Trump has called it. Bloomberg's John Herskovitz. Thanks so much, John. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. More than 30 European leaders will meet today in Paris to discuss support for Kyiv, including plans for a, quote, reassurance force of European soldiers stationed in Ukraine. This comes after U.S. President Donald Trump has sidelined Europe as he tries to fast-track negotiations with Ukraine and Russia. Joining us now from Dubai is Tony Halpin, who leads our Russia economy and government coverage. So, Tony, this meeting is coming just as we saw other convenings happening at the same time in Saudi Arabia. What can we expect from these European leaders?
Yes, good morning, Jennifer. As you said, President Macron is gathering leaders to try and hammer out some concrete decisions about what's being called a reassurance force to deploy soldiers and other military equipment in Ukraine in the event of a ceasefire in order to bolster its security in the longer term. It's not clear, though, whether they'll be able to reach such an agreement. They've had a number of discussions about this in the last few weeks and months, and it's not clear that there are very many governments that are interested in signing up to this project.
So then what, if anything, will be on the table then, Tony? This is an impromptu summit. As you mentioned, we have seen a number of these convenings happening, not a lot of agreement happening. What then will be top of mind for these leaders?
Yes, Ukrainian President Volodymyr Zelensky will be there, and he said in advance of the talks that it's time for strong decisions. And he clearly wants to see a contingent of European troops in Ukraine as a backstop support for his army against Russia, and to ensure that in the future Russia is deterred from attack. But this is a question for many European nations, that if they do send troops to Ukraine, on what terms are they going to do so? What kind of reassurance would it provide? The UK and France are basically the only two countries currently that have said that they're willing to send troops, and even the UK there has rowed back somewhat from its initial commitments. So we'll be looking very much today in Paris to see, in fact, if Macron can persuade other countries to sign up, and what they think this reassurance force would do if they manage to get agreement to deploy it. And we have to remember that Russia has said very clearly it's opposed to the presence of any NATO and European troops in Ukraine, so it's very hostile to this idea.
If you can, Tony, talk a bit more about what we are hearing from Russian officials as it pertains to this ongoing conflict.
Yes, Russia is taking the view, particularly since the Trump administration has arrived, that this is a matter between Russia and the US for resolution, and that really Europe has no role to play, and Ukraine is merely the subject of discussions rather than a participant in them. And that's led it to engage very directly with the Trump administration, and the Trump administration has largely played along with this. They haven't carved out a role for European governments in the discussions that have taken place so far, and it's not clear how the US views Europe.
We'll pay close attention to that meeting happening today, though, in Paris. Bloomberg's Tony Halpin. Tony, thanks so much for joining us and for being on the show. Now, coming up, Turkish markets are steady after Donald Trump praised his counterpart, Recep Erdogan, but investors remain concerned about the costs of Turkey's all-out push to restore stability. That's next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Transport tariffs. President Trump revs up the trade war with a 25% tariff on all cars imported into the U.S. The move comes ahead of his broader push with reciprocal levies next week. Turkish markets steady as Trump praises President Erdogan, and the central bank promises tighter policy if needed. And rare protests. Thousands of Palestinians demonstrate across the Gaza Strip, calling on Hamas to relinquish control and end the 17-month war with Israel. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Hong Kong this week, where it's just gone 1:30 p.m. Welcome to Horizons Middle East and Africa. And, of course, Jen, keeping a close eye once again on tariff news out of the Trump administration. It's relentless.
It is relentless, and it's quite a bit of tariff news, quite a bit of tariff news that we did see on Wednesday, really roiling markets, and especially as we continue to inch towards April, Jumana, it's going to be interesting to see how investors are digesting the news and trying to make some sense of the clarity that we do have and the clarity that we don't have. But let's just take a look at where markets are positioned ahead of the trading day. Jumana, as you were mentioning, investors really digesting the news that we did get on Wednesday from President Trump about those auto tariffs. We did see a pretty bruising day at least for U.S. equities, but clearly, as we can see right there, U.S. equity futures pulling back ever so slightly from closing in the red on Wednesday. What we saw from the S&P closing down more than 1%, the NASDAQ down more than 7%, and a lot of the sell-off happening within the mega cap tech stocks, and especially the Mag 7 quarterly sell-off shaping to be the worst since 2022, but S&P futures tilting to the green right now. The Bloomberg dollar slipping as well due to tariff woes. We did see the dollar actually strengthening, though, when we first got that news from President Trump about the auto tariffs. But then we did get another bit of news from Trump about April 2nd tariffs potentially being a bit more lenient than had initially anticipated. So the price action there showing up a bit in the Bloomberg dollar. Our MLive team watching closely what is happening with bond yields, as we all are. The U.S. 10-year yield at 4.35% there. Clearly, there is still a bit of tariff angst happening, especially as we head into April. And finally, gold up more than 0.4% there, still finding a lot of support as trade tensions intensify, and there's a shelter apparently to safe havens as a lot of uncertainty still looms right now. Gold at about $3,032.48 there an ounce. And really quickly, before we move on, a quick look at our terminal chart. Stocks, as we were mentioning, have had quite a bruising past few weeks. We were talking not too long ago about correction territory for the S&P. And if you take a look at this chart here, stocks set for their first quarterly loss since September of 2023. That not likely to be something that President Trump wants to see. But clearly, a lot of attention is going to be paid to how these tariffs end up shaping up, and concurrently how it then affects a lot of the companies that potentially are going to be affected. Let's, though, check in on how markets in Asia are faring. Avril Hong is standing by in our Hong Kong studio, I hear. Avril, what are you watching there this morning?
You heard right, Jen. I am right here in the Hong Kong studio. What am I watching? It's these Japanese stocks, right? With Trump saying that auto tariffs are a go next week. These are the sectors that are getting hard hit in Japanese equities, not just about the level of levies next week, but also in terms of tit-for-tat measures, especially when you have the likes of the Prime Minister in Japan not ruling out counter measures. Of course, we're also seeing some of the chip stocks getting hit in in the Asia Pacific. But aside from that, I'd also just highlight the moves on the Japanese currency. It is the outperformer today. We had the likes of Credit Agricole highlighting that given the risk of, because of the tariffs, there seems to be a bit of a denting of carry trade appeal, so that's benefiting the yen. The other point that's being made by our colleagues at the Bloomberg intelligence team is that these automakers in Japan, they're kind of seen as benchmarks in the corporate world in the country, right? So if they're going to be hit by these levies, what is this going to mean for wage growth? And does this also affect the path towards rate hikes of the BOJ? As I say, for now, the yen among the currencies in the region gaining ground.
April, great stuff. Thank you. April Hong in Hong Kong today. Now, Turkish financial markets steadied as U.S. President Donald Trump endorsed his counterpart Recep Tayyip Erdogan following last week's chaotic exodus of foreign capital, triggered by a crackdown on the opposition. But are the financial shocks over or just subsided? Joining me now is Bloomberg's managing editor for Middle East and North Africa, Onur Ant. Onur, good to have you with us. I see you're back in Istanbul now. Just give us a sense for what you're seeing and whether you feel as though these markets have stabilized or whether this is just a short-term reprieve before investors get spooked out again.
Good morning, Jumana. As you did point out, there are signs of a stability in Turkish markets after last week's massive sell-off. Now, to be fair, the current stability is taking place or is forming at a new equilibrium in terms of where the rates are, where the stocks are, and where the lira is. But certainly, after last week's detention of Istanbul Mayor Ekrem İmamoğlu triggered this massive sell-off in Turkish financial markets, roiled everything from debt, the stocks, and the lira, we are seeing clear signs of stability in Turkish markets. And that's that was confirmed. Sorry, please go ahead.
So to your point, we started to see that stability come through because of some perhaps verbal interventions by the finance minister, Mehmet Şimşek. He's saying they'll do whatever it takes to stabilize the market. But then also the central bank actively came in and was supporting the local currency. So are we expecting more actions out of the central bank here?
Yeah, I think, as you said, the brunt of those measures was the focus of those measures was really the central bank intervention, which we estimate was around $25 billion during the first 3 days of the market sell-off. That really did much of the stabilization, along with the central bank's decision to raise one of its key lending rates, the overnight lending rate. Now, going forward, we expect the central bank to act as a stabilizer in the lira market, especially because that's where any spill-off into inflation would take place, should there be any more lira weakness. We don't see the same kind of intense, heavy central bank intervention in FX markets at the moment. They seem to be happy with the current level, which is about 38 per dollar for the lira. But should there be another pressure, downward pressure on the currency, we should expect the central bank to intervene again to stabilize the lira around its current levels, because the further it drops, the more likely it is that there will be a knock-on effect on Turkish inflation, which is already quite high.
And Onur, given you are in Istanbul, also just give us a sense of the magnitude of these demonstrations and whether you feel or you can see that the momentum is still there or whether things have started to die down a little bit in the last few days.
The protests were quite big, massive. The first few days, definitely the biggest in, I think, 12 years since the so-called Gezi protests shook Istanbul and also much of Turkey back in 2013. But there's definitely, it's so clear that the momentum has died down. We're seeing increasingly smaller groups of people protesting, mainly outside the main municipality building in Istanbul, pretty much every day still. But no, the crowds are nowhere near what we saw just a week ago.
Yeah. Bloomberg's Onur Ant, thank you very much for bringing us the latest from Turkey.
Now let's turn to the region here. A new study by Open for Business has found that rising discrimination against LGBTQ people is costing East African economies as much as $5 billion a year. That figure is set to spike if Kenya passes a bill punishing same-sex relations with 10 years in jail. Kenya, Rwanda, Tanzania, and Uganda are already spending more than $3 billion on health care due to the marginalization of LGBTQ people. The impact is also being felt in the workforce with losses in productivity and talent. For more on this, we're joined by Dominic Arnall, the CEO of Open for Business, a coalition of global businesses making the economic case for inclusion. Dominic, great to get you on, especially considering this report has just come out. Talk to us about this $5 billion figure and the figure that you and your team say is costing East African economies if they do discriminate. What does that comprise of?
So by far the biggest bit is the introduction of the Anti-Homosexuality Act in Uganda. So the introduction of that law triggered some very tangible immediate costs. So, for example, the loss of the World Bank funding, the loss of AGOA status in the US, increased healthcare costs, which you just mentioned, and of course a talent flight of young people who very quickly after the bill was introduced began leaving the country. So that probably makes up, I'd say, about half of it. And then across the region, we've got increased costs from healthcare, lower direct foreign investment as a result of the bill, and a huge number of other smaller factors that make up the overall figure.
Do we know, Dominic, whether or not governments are considering a lot of these economic factors when they are passing these bills? What do we know from the public sector about the push for some of these bills, especially if you consider some of the economic consequences that they're seeing thereafter?
So we don't know directly from the public sector. I mean, what we do know is that a lot of these bills have been floating around for quite a long time. Uganda is the only one that's passed so far. There's other bills that have existed in Ghana and, of course, in Kenya with the Family Protection Bill. I think the fact that they have been floating around for some time gives some indication of the fact that there's a lot of consideration going on at government level.
What do you make of the case? I've spoke with the president of Ghana, who actually said that he believes multilateral institutions should stay out of a lot of some of the personal issues, cultural issues of some of these countries. What do you make for that case? Yeah,
I mean, you know, my view, you won't be surprised to hear it opposes that view. I think that the World Bank have been pretty clear about their values framework. They've been pretty clear about the mitigation measures that are required in order to receive funding. And I think under those circumstances, it's right that they put those forward to people that are requesting funding.
Do you expect FDI, Dominic, to take an impact as well?
Absolutely, yes. And this is something we haven't seen just in the region. It's something we've seen around the world. After we found that there's not just correlation with LGBTQ rights in the economy, that actually changes in LGBTQ rights can precede and predict changes in the economy. So, for example, countries that go through decriminalization, talking about Barbados and Singapore just in the last few years, can see a bit of a boost as a result. And then, of course, you've also got countries such as Uganda, who, since introducing the Anti-Homosexuality Act, have seen a huge hit across a number of different areas.
What's your expectation then, Dominic, for the longer-term impact to some of these economies if these bills do, in fact, stay in place?
Look, I think the reasons for putting these bills through are sort of varied, but very often they're political concerns. They're not religious concerns. So the trouble is that it's a relatively short-term fix for an electoral problem. And we know that the impact is extremely long-going. You know, if young people are leaving the country, there's no indication that they're coming back, for example. We know that so in the case of Uganda, even if Uganda was to pull back the bill tomorrow, and there's no indication that that will happen, the losses they've already faced are incredibly significant. So there's an instant short-term, but also a very long-term impact of introducing these kind of bills. And we would urge countries to consider that very carefully.
And Dominic, if you can really quickly, in the U.S., we are seeing the Trump administration actually calling on more companies to roll back a lot of their DEI. So, I mean, what do you make for the state of really where a lot of these inclusion efforts are globally?
I mean, there's no doubt that we're seeing a very shifting, fast-moving policy environment at the moment, particularly in the US. I think it's very, very early to tell what the impact of that will be. There's been a lot of talk about it, but we're very, very early days, so it's very difficult to calculate.
All right. Dominic Arnall, CEO of Open for Business, joining us there in Nairobi. Dominic, thank you so much for joining us and for your insights. Really appreciate it. Now coming up, the Sudanese army reclaims the center of the capital city of Khartoum. We get the details on the recent gains made against the militia. More on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Sudan's army has recaptured central Khartoum, including the international airport, and is edging closer to forcing the rapid support forces out from the capital city. It comes after the army seized back the presidential palace last week. If the militia is successfully pushed out from the capital, it would mark a turning point in the 2-year civil war. For more, let's bring in Bloomberg's Ndiro Oganga, joining us now from Kigali. So Ndiro, walk us through the efforts that have led the army to recapture, the city center.
Hi, Jen. So this has been a long time coming. It started in September of 2024, where they were gradually ramping up their forces. They surrounded the city, and slowly we have seen them begin to capture some of the key places that were strongholds for RSF. They took over the presidential palace, the central bank, and also the National Museum. And it started off slowly, but over a short period of time, everything happened all at once. On Monday, we were talking about them recapturing the presidential palace, but saying that RSF still controls part of the city center, including the airport. They lost those strategic points yesterday when the military took over these positions. We saw the leader of the army walk in the presidential palace as a sign of victory, and they were saying that RSF soldiers are now fleeing the city center. Moving forward now, it's the hope that they're going to start to fortify their position in the city and start looking beyond the city in places like Darfur. RSF will be counting their losses. They have controlled some of these key institutions and also the city center since the war began. And so losing this will be a big blow to them, but they still control other parts of the country where they're hoping that they'll fortify their position and fight back should the military try to come and launch an offense.
How do we see this affecting really what the war might look like moving forward, Ndiro?
You can look at this in two fronts. For the people, it's a sigh of relief. First of all, the city center under the rule of RSF, people were complaining that there was restricted movement, there wasn't enough food, and just access to basic goods and basic amenities. They're hopeful that the army will restore some form of normalcy, that they'll be able to move freely, that there'll be electricity that will be restored back in the city center. But building back is also not easy. One of the priorities of the military outside of recapturing territory is gaining more ground, and so for them, building back might not be top of the list. They might ease the restrictions of the RSF, but not so much relief is going to come from that. They're also going to try and move to RSF territories, try to capture those. But as the war is happening, the casualties continue to rise. There were reports, confirmed reports, that an airstrike by the military killed nearly 300 people. And these are reports that the army is denying, saying that they only attacked RSF soldiers, and they're not taking accountability of the casualties. So far, 150,000 people have lost their lives. 12 million people have been uprooted from their homes. 48 million people in risk of hunger and in dire need of food. And this is the reality of war, that while people are winning on one hand, on the other hand, it's the majority that keeps counting the cost and taking the blows.
Certainly, and the humanitarian cost as well. Bloomberg's Ndiro Oganga in Kigali, Rwanda. Ndiro, thanks so much for joining us. Now, coming up, Israel producers are seeing an opportunity for increased arms sales despite restrictions on imports. We cross over to Tel Aviv next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Hong Kong. As the US, UK and Italy restrict their military exports to Israel, its homegrown defense industry is producing more than ever. For more, we're joined by Bloomberg's Galit Alstein in Tel Aviv. Galit, you've written about this for Bloomberg Business Week, and you found that there's more to the change than just a surge in the scale of production. What actually is going on the ground in Israel?
Right. So actually, over a year ago, early into 2024, Israeli Prime Minister Benjamin Netanyahu starts to speak in his public appearances about having to bolster the Israeli defense industries. Now, this industry is already very large, and it is world famous for its cutting-edge technologies. And what he's talking about more specifically is the broadening of the industry's portfolio so that Israel would need to rely less on military imports and be more self-sufficient. Now, the timing for this was not at all random, because several months into Israel's war in Gaza, which started after Hamas's October 7th attacks, some of Israel's allies, mainly countries in Europe, but also Canada, said that they were pausing military shipments to Israel in an attempt to steer the government away from the battlefield and back to the negotiations table. Now, Israel, on its part, was feeling vulnerable as it was fighting a war on several fronts, and as I mentioned, decided that it needs to be more self-sufficient. So I'll give you maybe one example of how this played out. Last May, former U.S. President Joe Biden, perhaps Israel's largest ally, he paused the shipment of heavy one-ton bombs, saying that he was concerned over a military operation that was going to be launched in South Gaza. And what happened is that just under a year later, Israel confirms that it's setting up local production lines to make these very bombs itself. They're called the Mk-84s, and the same is true of other items like navigation systems and other military components.
Yeah. And so I guess the follow-up question to this is, are you expecting this to be a permanent change in policy? How does that tie into the broader picture of conflict in the region? And what are going to be the impacts on the economy? What are the likely impacts that this is going to have on the Israeli economy?
Yeah, that's definitely a good point, because, Israel admits that it was affected by these bans, despite the fact that almost 100% of its military imports come from the U.S. and Germany, who generally kept shipments coming throughout the war. So officials are telling us nowadays, we think twice whether we want to import an item that's crucial to us, that's crucial to our defense industry, or if we want to make it here at home. And one thing they do stress is that Israel is not setting out to produce what's known as platforms like fighter jets or submarines. And they also stress that the strong reliance that Israel has on the U.S. will continue, but maybe not so much on other countries when it comes to crucial items. Now, in terms of the economy, so to simply put it, to sustain these new and existing manufacturing lines, Israel needs to export these items as well. So Israel is already today the world's 8th largest defense exporter, and it is popular because what it sells is combat proven. So to wrap up, quite ironically, in some cases, the very same countries who embargoed Israel now will keep buying from it, and volumes may even expand.
Galit, thanks so much for that reporting. Before we go, we're just getting some breaking lines crossing from President Trump. In a Truth Social post, he says, if the European Union works with Canada in order to do economic harm to the U.S., large-scale tariffs far larger than currently planned will be placed on them, both in order to protect the best friend that each of those two countries has ever had. So more tariff news. That's the end of our show, Horizons Middle East and Africa.